Hey, today we're going to talk about how to maximize your car write-offs as a solopreneur. If you're not familiar with me, my name is Jamie. I'm a CPA based in Toronto, Canada, and I'm also the founder of Chill Books, which is an online course that teaches entrepreneurs all the essentials in setting up the financial management of their business, including how to use QuickBooks and how to maximize their write-offs. So today we're going to talk about some juicy write-offs, because I always find when a write-off is something that you're already spending money on personally, then that's like the best kind, because you're like, I was already going to pay my car insurance anyway, so might as well actually be able to claim some of it. And also something really exciting today is I'm going to share with you what you should be doing on December 31st or January 1st. That's why I have timed this video to happen in mid-December, so that you are ready to start claiming your expenses for your car in the new year the right way and the easy way. The first thing I want to talk to you about is what you can deduct as a solopreneur. So if you're using your vehicle partially for business, then what's going to happen is you're going to claim a percentage of all of the expenses that go into you having the vehicle, maintaining the vehicle, using the vehicle, and that percentage is going to be prorated for how much you use the vehicle for business versus how much you used it for personal. For my incorporated friends, there's also one option to claim. Instead of looking at all your expenses, you can claim a per kilometer allowance. I'm not going to get deep into that today, but just know if you're incorporated, you have multiple options for claiming your vehicle, but you're still going to want to track everything so that you can make sure that your strategy for claiming your vehicle is optimized to give you the most money back at the end of the year. So I always recommend people still to track these expenses for 1 year, and you're gonna have to track your mileage either way, so let's get right into what that looks like. First and foremost, what kinds of expenses can you claim? Gas, maintenance and repairs, so that looks like if you're going for oil changes or changing over your tires for the winter season, the cost to go into see your mechanic, those types of things. Insurance for the vehicle, your license and registration fees, and if your vehicle is leased, you can claim a portion of your lease payments. Be careful if you're driving what the CRA deems to be a luxury vehicle, then you might have a cap on how much of your lease payments you can claim. Same goes for financing. If the vehicle is financed, you can claim a percentage of the financing interest, and there are some limits on that as well. You can claim your parking costs. You can claim if you bought the vehicle outright, you can claim a part of that purchase cost over time. So those are the things that you want to be tracking. And by tracking, I mean keeping receipts for, or if it's something like your lease or your financing, keeping that original contract that will share the details of the amounts that are coming out of your bank account every month. So those are the things that you can claim. And how you tell the CRA how much you drove your car for business in the year is by tracking your mileage. So I know like the word mileage just makes you want to just like curl up into a ball and be like, honestly, I don't even want to claim my car at this point because this is too much drama. But I have a really good tip for you, so stick with me here. Now, in order to claim your vehicle expenses, you need to track how much you drove the car for business versus for personal. How to do this? Step 1, on December 31st or January 1st, go out to your car and write down your odometer reading, because that's going to be the base for the calculation. And then throughout the year, anytime you're driving your car for work, you need to track where you were going, why you were doing it, and I'll share some examples of what is considered to be for work or for business. But you want to track the actual total kilometers that you drove in order to get to those business meetings and to get home, because that's going to start to build up the total kilometers that are related to business and help you to figure out how much you drove for business versus personal, because you're going to claim that through the year. And then at the end of the year, again, December 31st, you're going to write down your odometer reading, and that is the complete sequence. So you'll be able to know by looking at your odometer reading at the start of the year and at the end of the year. That's going to tell you how much you drove all year long, and then your tracking of your business trips is what's going to help you know how much of that was business. So And like I said, I have a tip for you after this, but I wanted to share with you what is considered a business trip, some common ones. One is going to visit a client or a customer at their place of work, at their office, or maybe you're meeting them for a meeting, like at a coffee shop. You can track the mileage to get to that coffee shop, that lunch, that dinner, those types of things. So when you're going to meet with your clients in person. The other thing is if you're doing general errands for the business, like administrative errands, maybe you're going to the bank, or maybe you're going to purchase supplies or inventory, or going to the post office, those types of things. When you're driving there, you want to track the mileage, how far you drove to get there and to get back, because that counts as business use. And then another common one is personal development, networking, conferences, those types of things. So if you're going to a conference, track the mileage to get there. If you are going to a workshop or a seminar, anything that's related to your business from a professional development standpoint, track your mileage to get there and back, and that counts as business trips. So those are typical trips that someone would take for business. And so the trick that I wanted to share with you is, if you are a sole proprietor, if you're not incorporated yet, you are a sole proprietor, you have your vehicle, you drive it sometimes for business. If you track your mileage for 1 full year, that can be what's called your base year. And then in the future, so long as you're driving about the same percentage business versus personal, and there's like some rules on the CRA site about what that looks like, but I won't get into it, then you only have to track the first 3 months of that next year, and the year after, and the year after, and the year after. So once you have one baseline year, then the admin burden of tracking mileage decreases. And then of course, when you have your bookkeeping system, which you're going to set up by using my online course, Chill Books, once you have your bookkeeping system in place, tracking all the other stuff is chill. So that is my key tip for you, because CRA knows as a sole proprietor, you don't have all the resources in the world. So they know that the admin burden of you tracking your mileage all year round is heavy. And that's why they have this rule in place for sole props, to give them a little bit of a helping hand and not have to do the full year every year. A mistake that I see often that I want to call out is not keeping receipts and tracking expenses for your gas all year round. Sometimes people think that they only should be claiming the receipts for gas that they like when they were traveling, when they were driving for business. So say in October you drove for business, you kept those receipts. November you didn't drive at all for business, so you're not going to keep those gas receipts. That's wrong. You need to keep your gas receipts for every single time you fill up your tank for the year, because how it works is everything gets prorated. So which means you look at the total cost for the year and take a percentage, and so you need all of those gas receipts. So to recap, make sure you're tracking your mileage. Head out over to your vehicle at the end of the year this year to read that odometer reading. Make sure you're tracking all of your vehicle expenses that I mentioned earlier. Comment write off below, the words write off below, and I'll give you my access to my free write-off guide, which outlines all of the expenses we talked about, and maybe some more as well. Well, it definitely outlines more than what I spoke about in this video, because it goes into all of the common write-offs that are available to you as a solopreneur. So definitely get on that, because tax season is going to be coming up soon. And yeah, I hope this video was helpful for you.